Welcome to your Mortgage Insider update for this week. It's June 22nd. Oil prices are coming down. As last week we saw the signing of the peace deal with Iran. It is very fragile and it creates a 60-day window for continued negotiations, which started this weekend. They've been kind of rocky. Right now, the straits are open and oil is flowing. Gas prices have come way down, relieving a lot of the pressure on future thoughts on inflation. Speaking of inflation, PCE, personal consumption expenditure, will come out later this week. So we'll get a lot of new updates, and we've got about 6 more weeks before the Fed meets again. They held steady with their rates last week, but left a lot of questions in the air about the length of the war to cause inflation to really not run out of control, but definitely get well above the Fed's target, which they maintain at 2%, with inflation running well higher than that, closer to 4%. Let's take a look and see how charts are looking for the 10-year Treasury this morning. As we start off Monday, the 10-year Treasury is back up. It was up a little bit last week, down a little after the Fed meeting. So just a little bouncing around. Still right now just below 4.5%. Mortgage-backed securities are down, meaning the price of the security is dropping while the interest rate that the consumer would pay is rising, which is why we'll focus on the 10-year Treasury this morning. So far this morning, staying below the 25-day average. We're just below that 4.5%. Ideally this week, as the PCE inflation number comes out, if we can stay in this level, this is definitely a reduced level of interest rates than we saw just in the first weeks in June, as well as back in the middle of May when we kind of peaked. So as the negotiations continue and we watch the barometer here of the 10-year Treasury, we're hoping the interest rates can stay relatively flat and eventually move down as gas prices start to reduce the inflation numbers and give some relief to the markets. One last little piece of news, the maestro, the Fed chairman, Alan Greenspan, actually passed away this weekend at 100. So he was the one that led us through as a Fed chairman through major inflation worries and warnings back in the early 2000s. Of course, the dot-com bust, and then there was after 9/11, the big recession coming into 2002. So the maestro has passed away. That was actually a time when Fed Chairman Warsh now actually served on the Fed at the very end of Greenspan's reign, as well as the very beginning of Bernanke. So make it a great week. We'll see you next time.